Hello and welcome back to KD's Business Tips. In a short video here, Michael and Peter are going to talk to you about understanding shareholder loans, right? There's a lot of things that business owners should know about shareholder loans. You ever transferred money from your business account to your personal account, right? Maybe forgot all about it. Or maybe vice versa, you took out money, forgot to claim it, things like that. Those are shareholder loans. When you're loaning the company money or it's loaning you money. Now there's rules around both of those. So many times this happens, you move money between your business and personal account, and the tracking of that is really key because shareholder loans are a very legitimate thing. They're very powerful in tax planning and your planning overall, and you have to make sure you track them well. It's very important. And these shareholder loans are very simple. Again, the shareholder loaning money to the company or the company loaning money to the shareholder loan. Shareholder can go either way, these loans, okay? And there's sometimes where, you might pay for expenses personally and then the company either reimburses you or you put it in as shareholder loan. The shareholder paid for these expenses. Sometimes people do that. It is much better to put money into the company though and have the company pay for those expenses. When managed correctly, shareholder loans can be a very useful tool for your business. We're going to talk here about what they are, common mistakes to avoid them a little bit, and what you should know about them. So number one, a shareholder loan, as we mentioned already, is money that you put into your corporation as a loan, or typically if you pull it out as a short-term loan, and it's got to be very short-term. We'll talk about that in a bit. This can happen with the tax implications for the shareholder loans can vary depending on which direction the money flows. So if you are loaning the money to the corporation, no tax consequences because you can loan it as long as you want. It can pay you back. You don't have to charge any interest. You can take it out whenever you want, tax-free. It's a loan payback, shareholder loan payback. Now, if the corporation loans you money, then you only have 1 year past the current year end you're in. So if your fiscal year is December 31st and you're in 2026, well, your loan payback has to happen by December 2027, December 31st, 27. So you get 1 year past the current year. So it could be up to 2 years, anywhere up to 2 years. You do get to hold that loan. But if you do not pay back that loan by that time, you have no choice but to claim it as income. So many business owners do this transfer. This is actually a very normal thing. The truth is the movement of funds, has to be tracked, as I said, and they can have significant consequences in an audit if you don't track it, you don't show it. CRA shows up at your door, they see these amounts, they're probably assessing you for something, and it may not even be correct. Corporation, remember, is a separate legal entity. That's why the shareholder loans are separate. But as a business owner, if you're a shareholder or related, that's when you have those rules of paying back. If not handled properly, the CRA may treat the moved funds as taxable income, which means you could end up paying tax on the money you thought was basically a temporary advance, right? So be careful. And they're not always a problem. When used correctly, they're helpful, as I said. For example, if you're funding a new corporation, so you say you're starting a brand new business and you got a bunch of startup expenses, you can go put $50,000, $100,000 in the company as a shareholder loan, and then eventually you could take that money back out tax-free when the company's making enough to pay you back. Now here's a few mistakes you should avoid. Number one, do not pay for personal expenses out of your company, groceries, vacations, personal expenses. Don't pay for your personal expense out of your business. You do not need CRA checking into that thing if they double check. Plus, it's more bookkeeping, more accounting, more potential for things to go wrong. Do not use your business to pay for personal expenses. Secondly, the mistake that we do sometimes is we forget to pay the shareholder loan back. So making sure we have a specified repayment term, again, because if we borrow money from the company, then we have to either pay it back or claim it as income. So making sure we document that, put dates down. Now, the other way is not as important. If you loan money to the company, it can happen anytime, but still track it. Poor record keeping is not another one where you can't even track the shareholder loan. You don't even know what it is and you get audited. That's not a good one. With accurate bookkeeper keeping, though, you can then keep a true shareholder loan balance. And remember to keep in mind a few best practices here. First, keep business and personal finances separate, which I said already. Business pays for business, personal, personal. You go to Walmart, you're buying business stuff and personal, pull 2 cards out, pay 2 times. Separate the order. Always separate your businesses from your personal. Maintain good bookkeeping, making sure everything's properly recorded, of course, and documented. Track and monitor your shareholder loans regularly. Don't wait, right, until tax time to review your shareholder loans. Review them regularly. Once a month, I would suggest, if you're doing regular shareholder loans. Work with your accountant, of course. Let your accountant help you in determining your shareholder loans. And in their last video, we talked about dividends versus wages. So now we have dividends, wages, shareholder loans. And salaries. We got a lot of different mix. There's also bonuses. So there's various ways to plan for your taxes when you have shareholder loans. That's about it for this video. If you got any questions, please post in the comments below. Other than that, we'll look forward to seeing you in the next Business Tips video.